Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning, Nick.
Right, two thought-provoking charts to tell the crowd about. Let's kick off with a Great British Pound against the US dollar, weekly charts. What are your thoughts?
Well, the uptrend continues, doesn't
Absolutely.
it, really? We've had the news from the latest Brexit news that we've got the transition deal all done and dusted. In one essence, it's a minor detail. There was always going to be a transition period. They were just haggling over the numbers. UK wanted 24 months. EU wanted 18 months. They settled on the shorter term. But that's okay. We knew it was coming. So that's not really been the big news about it. The Irish border, although they're saying that they've agreed to put a backstop in place if there's no further agreement. Again, it's not a conclusion. They've still got to have a full agreement on this border issue. But it just leaves the big play to come, and that's going to be the news on trade, and that's going to be the big one into October, because that's going to define how the UK comes out of this thing. So while the pound is buoyed on the recent news, it's still heading for storm clouds ahead. We're also seeing the pound gain because of the dollar weakness again and all the troubles that's going on there with the potential trade wars and whatnot. So there's two winds behind the pound at the moment. But you look at the trend, look at the weekly chart. It's been up and up and up since Brexit. And when you get a chart that shows a trend as strong as that, you've got to go with it.
So basically, we're looking to buy the dips.
Yeah, but I think you need to look at a good dip. You need to really pick your levels here.
Right.
There may be some sense in just buying a decent move, say 50, 100 pips down, but you do risk those headline news. And if something turns around on the US front, the dollar's going to gain really strongly. So I've been looking at roughly the 39 area, 139, if I'm going to pick up a long, even down to the 138s. But in between there, I'm just basically jobbing the levels. I'll job a short into 142. Well, I would have jobbed a short into 142. We're just breaking that now. But you stick to the big figures and the bigger levels, and up above we've got a big area at 145, so that's the next big area technically to look at.
Okay, so basically follow the technicals. Right, let's move on then to the US dollar against the Japanese yen. Dollar yen on a weekly chart. Again, this looks like a triangle. The textbooks would say that basically you break out from a triangle, normally with quite an aggressive move. Is this your line of thought? Yeah,
pretty much. We've been speaking about the big 105 area the prior weeks. A lot of support that was down there, a lot of barrier options. It seems like a lot of those were in place just up to the FOMC last week, and a lot of those expired down there. We did have remnants of a barrier down there, but it didn't stand up to much last week. And we've seen the break now. What we do know is that there's a lot of Japanese financial institutions who are still buying, and we're happy to buy a break of 105 all the way down to 104, maybe further. There's another barrier down at 104 that needs watching, but this is potentially a big break. And as I say, we've seen it supported. We've seen the break supported, but we're looking pretty pivotal around that 105 area. Yeah. And at the moment, the bounce has been limited very low to 105, 20, 25, and that's a strong signal that the trend is in place. And this trend's been down for quite some time, and it's set to continue.
But again, we've talked to a number of commentators this year, and everyone said, "Oh, this is key support on dollar yen. This is key support." But all the key supports have been broken this year. And as you say, the trend is your friend. Don't buck the trend. There's a series on the technicals of lower highs and some lower lows in there, which you would think that basically this has got further to go on the downside.
Yeah, I mean, the big level that we were looking at way back was the 108, 108.50 area. That was a big support area. That's been broken, and we've seen that step down and down and down, and the bounces have been very shallow. 107, 20, 30. It's all similar numbers. 107, 20, 30 was the latest or the further back resistance after the break below 107. We saw the same in the 106s around the sort of 30, 40 area. Now we're seeing it in the 105s around the 20, 30 area. So you don't need a clearer signal than that the trend is still in play. And until you retake those levels, then you go with the trend and you look to sell. I had a short into 105.20 last week. I took a small amount of pips on it because I didn't hold it, and I moved my stop down to near a break even, and it got stopped at that level. If I'd have left the stop where I was and carried on, I would have got out at 104.80 odd. But these levels, you can trust them. But if you test them too many times, the old saying, be careful of a break. So you trade tighter, you keep your stops tighter, smaller amounts. But as you rightly said, the trend is your friend, so keep going with it. And, the big 100 is in sight now. It was always going to be potentially on the cards when 110 broke, but now we're through 105. Everyone's going to start looking at 100, and then everyone's going to start commenting about when the BOJ or Ministry of Finance will come out and start jawboning it.
Yeah.
We've had a little bit of that last week, but it's low grade stuff. They're looking for big volatility. If it drops 500 pips in a session, that's the sort of stuff they'll intervene in or ramp up the chatter on. But we're not there yet. It's just normal market moves. But the trend is in play. But I expect the chatter to pick up if we get down towards that 100 level.
Understood. Right, on that note, thank you very much indeed for your time.
Thank you.